Hey, what's going on, YouTube? Kenny here. So I've been reading the comments, and I've noticed that some of you all probably want me to talk about how to read charts. Not only how to read charts, but stock market 101 stuff. And I know you don't think it's 101. Some of y'all think it's intermediate or advanced stuff. But pro tip, when you're marketing, never call anything a beginner series. It's always like an intermediate. Intermediate's code for beginner. And advanced is like code for like you should fucking know it, but you don't. So this is the intermediate series, all right? Hint, hint. Anyways, point is, what we're trying to do here, seriously though, is just kind of help folks along, paying it forward. If you watch the first Stock Market 101 video, then you know that a couple things are really important. If you just kind of skip to this, the first thing is if you think I'm rambling right now and I'm wasting your time, then you probably shouldn't watch me, because what you need to do is you need to find somebody who you resonate with, who can speak your language, speak to your tempo, and kind of teach you in a way that you will find either entertaining or funny or just relaxing or soothing. If you don't feel like this is your type of learning environment, then thank you for trying to click on here, and we will see you later. But for me, I'm really just doing this for the folks that are watching me anyways. So, you know, I can't betray that. So I'm going to be me, number one. But two is like, I learn best when I just have another homie telling me how I'm doing things wrong and saying, I don't think that looks right. And, you know, and that's how I've always operated. So this is me just looking over your shoulder and telling you what right looks like. So the first thing I do want to say, though, when it comes to chart reading and stock market stuff, I'll have you know that most of this stuff is not solved, all right? There's so many particulars, so many kind of incongruencies with the way that some of these... okay, so if you know anything about like statistics and stuff, you like look up the term p-hacking, right? There's a lot of that going on with the pseudo... because there's a lot of this is pseudoscience, right? But you have to figure out what works for you. Some of this stuff is very scientific, but the thing is, it's a graph, and it's representing a visual representation of stock price moving through time, right? So the best way to do this is I'm just going to go to any random stock, and this is Corsair, right? Because I want to start over and show you how I built out this Corsair kind of chart. But we'll just take it from the first and very, very first thing that I would talk to you about, which would be the candlesticks, okay? So typically these are green and red, right? Green showing an uptrend and red showing a downtrend. Mine are white and red because I'm special. I don't know. I just don't like the green because I like the green to mark up stuff like this. So therefore, I turned it to white. You can do whatever you want. Pick your pretty color. Make them pink or whatever. Anyways, so the history of this is... this was first used by Japanese rice traders to show, and that's why they call these like, the Japanese candlesticks or whatever. But there's what's called a body, which is this, right? And then there's a wick, which is this. So what that means is the wick is generally where it starts, and the body is where it ends. The body is the last word. So if I was going to read this chart, right, it goes up here, here, goes up here, comes back down, down, up, here, doesn't know, up here, tries to go up here, down, does this, whoops, back, up, and up, down. You get it? And then this is, so when it's when it's red like this, that means it's closed down here, you know? And then it comes up back here, it's white or green, it's closing up here. All right, that's pretty simple. Who doesn't understand? Rewind it. It's pretty simple. Okay. So a lot of folks have different kind of mnemonics or memory tips for some of these, like, you know, hammers and inverted hammers or whatever, being bearish or bullish or whatever, right? So, I mean, well, I guess I'll just show you. So right here is a hammer, right? So this would... people would constitute this as bullish, right? And the reason why it's supposed to be bullish is it's trying to go down. People are trying to sell, and it gets rejected very hard and ends up at the top, right? And it has this what's called a hammer, right? It's just a memory trick. I think the best way to do it if you're trying to learn fast is don't worry about what all those stupid memory tricks are, like shooting stars and hammers and stuff. But more so, just think about it in terms of, if you see a lot of wicks, in series, that's more telling to me than just one single hammer sitting here, right? To me, like if I try to find a spot in this, let me see if I can find a spot that'll be more telling. Well, I mean, this is good. Anytime you have a line over here, let me show you, like here, right? I'll zoom in. Oh yeah, that's another thing. You can zoom in and out all you want, right? Right now, each one of these candles represents 15 minutes. So let me just do this for you so you know. So this would be 15 minutes, 15 minutes, 15 minutes, 15 minutes. So these 4 candles is 1 hour, and this is another hour and another hour. So based on the way I swing trade, the 15-minute candles are right for me. And they might not be right for you. You might want to look at different time frames. And we can talk about that later and how we determine which time frames you want to work off of. So for me, swing trading, usually 3 days to a week, 15-minute charts are really good for me, okay? That's just me. Okay, so if you can see here, here's a wick, 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 okay? So to me, when I see those wicks, that constitutes a pretty strong resistance line, especially on this uptrend, right? What is suggesting, again, instead of having just one inverted hammer, whatever, you can say that, okay, not only are we doing once, twice, again, and again, make a strong case that, statistically speaking, if we keep doing that, people are trying to get over this line, trying to get over this line, trying to get this line, and they can't get over this line. And we know from previous interactions with this stock, 42 was a line in the sand, and 44 was definitely another one. All right, so that's that. Okay, so just really, really basic, and for some of y'all who are not kind of tracking. So like this is a 15-minute chart. So, but if I go to the 1 day chart, each one of these candles is 1 day long, and you would want to zoom out, right? I'm using TD Mirror Trade, not TD. I'm sorry. I'm using TradingView. There's free version, and you don't have unlimited alerts on the free version, but I like it. So I have like unlimited everything, whatever. But that's just me being extra. It's not necessary. So we're going to delete all these lines so we can start from scratch. Okay. So what you see here, okay, this is one of those weird ones because it just IPO'd this year, meaning it's just started trading. Initial public offering is what IPO means, right? So it started trading in September of 2020. So we don't even have these simple moving averages, right? And that's what is being shown here is the 50-day simple moving average. So let me take that off just to not confuse. Okay, so this line right here is what we're trading at post-market. So market's closed, post-market trading. Too easy. All right, so these are the daily charts. So each one of these represents a day. And so what this is trying to tell you is this is October, this is November, this is December, January is right here, and then February. Okay, and in series, so this is a month, another month, another month, and another month. So what this is telling you is the stock price started at 15 bucks, let's just say, and it went all the way up to 21, and then by November it does this and gets to 22, and then it spikes up here. How much percentage is that? 100%. 100% from November to the end of to the beginning of December. Okay. Stick with me here. I know this is really basic stuff, but I just really want to make sure that I don't leave anybody behind. Okay. All right. So now that we have that, let's go back to Corsair. Okay, here we go. So what you want to do here is, well, before we do that, what I have down here is volume charts. You can have it color coded or wherever like that. Light blue for me is buying pressure, and then dark blue is selling pressure, and it's usually green and red by default, but again, I'm extra. But all you need to know is like volume spikes. It's here and here. What volume will tell you, especially if nothing's happening, okay? So like if nothing's happening, like here, right? Nothing's happening. and it's staying sideways, but there's a lot of volume. And here too, nothing's happening and a lot of volume. That means that there is a strong sentiment that people want to buy strongly, but equal amount of people want to sell strongly. Okay, so what it's suggesting is because the price is not moving and there's so much volume, is that the volume is being absorbed, and so it's really crowded. So it has good trading volume, right? So it's kind of a good thing. It's a really good thing for traders. Okay. Next, if you see volume spike and it's going up, that's clearly an indicator of a bullish trend. Okay. Where things are equal, if there's less volume, tends to drop, right? Where there's more volume in general, it should go up. All right, so I'm just going to go over 2 quick ways that you can mark up a chart, and then we'll just kind of end it for today because this one's going pretty long anyways. But I will say that, when you're looking at charts, and if you kind of noticed, I was being pretty skeptical when I said that, because I know for a fact that when you're looking at these charts and all these chart gurus that are using all these crazy things, when you mark up a chart perfectly right, and the technicals line up, just remember there's so much bias in the way that you mark this up. If you're personally marking this up, there's nothing preventing me from drawing this line and somebody else taking it down a notch like that, right? And it's just so small, but it's statistically very, very significant. Like if I move that, like that's dollars and dollars and dollars. It's so significant where you write the line, right? So you can use it as a guide, but don't fall in love with it, right? But I'd say, if you use it correctly, it can be deadly accurate. And for certain stocks, once you've categorized them properly, based on volume, float, volatility, those kind of things, right? Once you've been able to bracket in and figure out what it is, then it's absolutely accurate for some things. And I'm using Corsair because a thing is, kind of boiling up right now. And so I just kind of want to showcase you that. So, if you've kind of watched my channel, I've talked about the most honest channels are these horizontal channels for so many reasons. One, we just talked about it. You can't almost incorrectly mark this up because like you got this number. If I put it at 45.59 because there's no slant or no. It's not increasing or decreasing in value, right? So it's 45.59 as a line in the sand, and it's also down here 32.98. Even if somebody want to come along and say, no, I don't think so, I want to use the body of the wicks instead of the wicks, right? And they say you get 33.61, you get a couple cents off, right? And here's 32.88, whatever. It doesn't become so problematic. Whereas when we're talking about trend lines, multiplicatively. Becomes problematic because, well, let's just show you. Right? So if you go into the, let's go 1 day, right? So look at what happens. Like when you go in the 1 day, do you see what happens right there? Like look at that comparatively. Like it becomes like even like this. Now I do this. Now watch I zoom back down in 15 days. It doesn't look like much, but look what just happened. Like we're way off now, right? So that's the theory behind that. Okay. Okay, so when I say this is the most honest channel, it's for a bunch of reasons. Because when price action goes sideways, again, that means that the stock is rather crowded, and it's very fun and lucrative to trade these kind of stocks because you have a perfect entry and exit point. So I mean, like. For this one, right? So if you take this and you know how I work this, right? You shouldn't be greedy, so you squeeze down, right? So if you squeeze this down to like with the body, the most of the body, so like let's go down to here, right? And then I squeeze this up and I take this because you want to front run folks, okay? So if the folks are trying to buy and sell on this line, you want to front run everybody, right? Because you want to make sure you get your fill. So I would do something like this, all right? And I know when I show people, I do this. And that's just because it's just standardly like standard. It's just accepted as the standard, right? Like if you go to FinViz and you look at their mathematical charts, when they build out, like for instance, if you go, oh, okay, I want to find a channel, right? And you find these ones, right? That's how they build them out, right? They build them out off the wicks. So it's generally accepted practice to build them out off of that. And if I didn't put that, you all be like, this guy's crazy. But I'm not, trust me. I'm here to front run everybody. So if I put this here, 4280, and I put this here and I tighten this up to something like 3460. So now, here's the thing. Here's where you need to be discretionary, guys and gals. All right, we talked about Corsair way back here, right? So say we put this channel down right here, and say we weren't greedy and we put it down right here, okay? Well, we talked about this, right? You would have, say you came up here, we're gonna wait. You don't even have to wait. You can put you can short there and get money on the way down. But let's say you didn't want to short there because you don't want to be that aggressive. You just want to buy and sell, all right? You could have got down here. You could have said, okay, I'm not gonna buy yet. That's fine. But when you got down here, you would have bought, right? And then you would have got to move to the up, and then you would have bounced here. You could have made a decision here whether to buy or sell, and that's why. And then this is why you have tranches, number one, but then you also have the second line, guys. The second line. So I do mark up the second line for the true bottom. So I probably wouldn't have sold here. I would have held. All right, let's continue. All right, so don't tell anybody this, but this is my secret sauce. Again, a lot of folks use the 50-day simple moving average as their kind of buy signals once you cross the 50-day. I use it sometimes, but in general, if I see a channel like this, I'm just trading off my channel. I think this makes a lot of sense because I told you this is a pretty honest channel. So let's just kind of go through this and show you how I would trade this. One piece of advice. What I do, and secret sauce, guys. I'm going to give you some secret sauce. So I told you that we want to front run folks. So front running folks is like using this line, right? Getting ahead of them. But you also want to put down this other secret nifty line here, and I usually color it. Like, but Kenny, you haven't shown that on your other charts. Yeah. I don't have to tell you everything. But anyways, so if you've seen anything like this on some of my charts, that's what I was trying to do. So what this means is, so now we can come in here and trade this chart, right? So if you would have say you bought, well, you wouldn't have picked up this pattern here. You probably wouldn't be confident in it until it got here, right? So you wouldn't have bought here, but you would have got in here, right? So now I come over here and see, you might have sold here for a loss. But if you have this little nifty little extra line here, again, you want to front run people and not be so greedy on this side, but you want to be a little bit more patient and give it more room. You don't want to be tight stop Tony when it comes to stops, when it comes to that, right? Okay, this is just a trading strategy that you can use, and I'm just showing you how you could use this on this chart, right? So what you want to do is, again, don't sell because we haven't hit this like invisible barrier that we're talking about, right? You come up here, you could decide to sell here or you could leave it. Technically, you should leave it, and then you would get your first sell here. And you say, Kenny, how much is that? It's 22%, right? And if you were leveraged, I mean, this was only, 12 days. If you had an option or you were leveraged, I mean, if you were 4 times leverage for Corsair, that's pretty easy to get on TD Ameritrade. 4 times leverage, that's 80%, guys. You sell here, okay? You sell here, and guess what? If you go short with the same amount of leverage, guess what you made? You know what you made. Well, it's a little bit less on the way down, but 17.8%, right? Times 4, okay? That's if you're fully leveraged. If you're not leveraged, 17% is still pretty good. All right, so you're like, hey, Kenny, I don't have the balls to short. I know what happens to short sellers. They get squeezed. That's fine. Then you come down here, you pick it up again. And maybe you sell here, maybe you don't sell here. If you don't, you come back here and you sell up here. Or you let it run the next, and then, kind of sell up here somewhere, This is where discretionary is really important. You will get used to it and you will know more about it. But if you're there and you can manage that trade, manage it. If you can't manage it, just put a limit order, and put a limit order to buy. It's super simple, guys. And again, that's another 20% or 80% if you have leverage. And then it comes back down. And then you can say here, like, man, should I buy? I probably would. I know I didn't touch it, but I mean, this channel is so effective. And then we would have got another buy right here. Guess what? From there, you would have got 18%. So what am I saying right now for Corsair? Like, oh my God, Kenny, are you saying sell? Maybe. I'm not saying that it can't go up past this, but I'm not greedy. You know, this is what I'm trying to say. So all you folks that, were trying to do all this GameStop for 400%. Well, I mean, I got more than that off of this. Like, look, you got, 80% there. Let's just call it, loosey goosey, like 70% coming back down. That's how many percent, guys? 150, And then we got it again going back up, And then we got it again going back down, and we got it again go back up. This is a really clean channel. And you play it until you bust it. When you bust it, you bust it. But that's the thing, right? When you bust it, be prepared to bust it. You also want to pick a position, okay? Kind of a side. So one thing that I'll show you is, like, you see how these like SMA lines are lining up? That's a trend, okay? When you get that, don't fucking sell until you cross that 50. This is when and this is why it's important to use every tool that you have. And I know this is just a beginner's guide and I'm just going through it. But, when I was learning that Silam Kung Fu, that's Shaolin Kung Fu for you plebeians, you don't separate your junior students from your senior students because, you can learn a lot from seeing them do things, and sometimes you might pick up advanced concepts even though you don't understand the basics, and it's fine. And so you can actually piece together what it takes to get there. So based on all that, what I'm trying to show you is, this is the 50, the 100 and the 200-day moving average, right? White, blue, and dark blue. Once you get these things all lined up like this, that's a very, very strong signal to just hold, and then you wouldn't want to sell until that would be your sell signal when you cross back down over your 50. And so my point is, if we do break up here, and this is why chart reading is important, as you can see, right? These things are starting to line up down here. You see how elevated it is off of this line, right? It tried to do it here, but it's going to try to do it again. So what I'm saying is, if it breaks out and these lines start to line up again, that's a very bullish signal. I would not sell off of this, right? So I'd want to watch for a break. My point is, if you want to short down here, probably not a good idea based on this already occurring pattern here of the spike. I mean, obviously it would have been profitable, but scary to hold through this, right? So I think for beginners, and since this is a beginner guide, what I would suggest is don't do the short side of these channels because you offer yourself up a lot of risk. But what you can absolutely do is buy the dips. So if you would even just buy all these dips, right, and ride it out. So say you buy this dip, right? And this is what I was talking about. Ride it to this, sell here before everybody else gets out. Wait for this, buy again, and all you have to do is set an alert on this if you didn't know. So you go here, check it out. I click on the line, and I add an alert. And now every time it crosses that line, sends an alert to my phone. And so I know. I'm like, hey guys, buy Corsair. See what I'm saying? Real simple, right? I know. Bro, buy my Lambo course. I know. It's crazy. All right. What was my point? Okay, what I'm saying is, okay, buy the dip. Buy the dip, make money. Buy the dip, make money. And the cool thing about it is, even if you wanted to not use this as the sell signal, you bought this dip, it went up, you're like, oh man, Kenny, it's running. I don't want to sell you. This is where and I already said this, but this is where discretionary and knowing patterns and knowing volume and knowing order book flows and stuff is going to help you. But if you don't, fuck it. Just wait until it comes down, crosses the 50. And guess what? You're still profitable. Even if you did that. Look, even when you wait till it crossed the 50, still got 18%. No love loss, right? So, again, and then we bought the dip here. If you bought it down here, you go up, you made 17%, right? And if you watch the last video, what were we asking for? 1.5% is all we wanted in a week. you would have made 17.65% in 2 days, you know? And at the longest, here's this longest channel, you know, you made it in 13 days, 2 weeks. 2 weeks for 21%. So that would be 10% a day, 10.5% a day, as opposed to 1.5% we were calling for a week. And remember, with compound interest, how big that 1.5% gets. If you don't know what I'm talking about, we're talking about compound interest calculator. One of the strategies we use is we try to get 1.5% a week. Is that reasonable? I think it is. You have to be good, though. I mean, but I think it's reasonable. Anyways, I'm going to close it there, but that is my guide to the basics for, gosh, I don't know, chart reading. We'll go into more. There's a lot more, but that is just a starter guide to get y'all thinking about it. And put questions in the comments, because the more questions, the more clarity I can provide. Again, this is me just having a conversation with you, so the more questions I get, the more that I can be more clear about it in the future, and then we'll just cobble something together. If it works out, it works out. I know a bunch of you guys probably are very used to structure and points and me going through certain things, but I think this is fine. But if you don't like it, let me know, and we'll think about changing it. We probably won't, though, because I'm lazy, but maybe we will. All right. As always, thanks for watching. I appreciate y'all. Yeah, take care, and we'll see you later.